Hi everyone and welcome to my more important analysis videos on Friday the 9th of February with me, Richard Perry, market analyst at Hantec Markets. Wall Street sold off hugely yesterday. Big falls on Wall Street, and we can see that the S&P 500 down 3.8%, Dow another 1,000 points of decline. The second time this week we've seen that. Look at the impact that that's had on the S&P 500. Big break of that uptrend that's been in place for the past year, 14 months. Wow. But we've still got a really interesting reaction today on equities because the equity markets are fairly settled, aren't they? Now, that is possibly coming on a couple of reasons, really. We saw initially Asian markets sharply lower, and then they started to stabilise during later on in the session, and that came on the back, I believe, of Chinese inflation, which sort of fell more than expected, 4.3%. So a downside surprise on the PPI, which suggests that perhaps, or basically this sell-off at the moment is driven by two factors: volatility and fear. And fear of inflation, really, and what's that's going to do to markets. And the latest drive to the downside on Wall Street was probably taken up by the fact that the Bank of England is the latest sort of central bank to really sort of get a bit fearful of inflation and talking about tighter monetary policy. And subsequently, we saw the big sell-off yesterday, but the markets have sort of stabilised a bit on the back of that Chinese inflation data this morning, and also the news that the US government shutdown is probably not going to happen, as well as the Senate seems to be sort of passing through votes and passing it on to the House of Representatives. So you'd think that they should be able to get their act in order for that. Now, in terms of today, in terms of data, we've got UK industrial production or manufacturing production, which is expected to come back slightly. Still positive, but down on the month by 0.9%, and year on year down to plus 0.3%. So it'll be interesting to see how that impacts on cable or sterling, shall we say. And UK trade balance as well will be watched as well. Bank of England member John Cunliffe also speaking, so a bit UK centric on data today. But my chart of the day is the Euro Kiwi. Now, I'm sort of trying to steer away a little bit on the charts of the day from dollar moves, because there's has been a little bit wild, but still you can see that there is an improvement. This uptrend channel, you do tend to see these sort of uptrend channels forming on Euro Kiwi, and again we're sort of seeing a little mini one forming here: higher lows, higher highs. Recent low that came into support at 164.45 area. And again, yesterday's move tested that pivot, 170.80, an old pivot. Testing that pivot. So the resistance overhead, 170.80 to 171 figure, is in place. And the market fell away, but started to gain a bit of support again. So there is a slight bullish bias still going on in Euro Kiwi. And the market is sort of pulling higher on the daily chart. The hourly chart is a little bit less sort of obvious on the positive front, but still there is a slight positive bias on momentum indicators. But yeah, it sort of all suggests sort of using any intraday weakness as a chance to buy, really, because I think it is putting pressure ultimately on this pivot, 170.80 to 170.90, and if that is broken to the upside, it will sort of certainly continue this uptrend channel, but then sort of open the next resistance level, which is this reaction high here, 72.65. So there is possibility of upside potential, and you've got the momentum indicators on the daily chart as well, having sort of previously failed around 50 on the RSI. Have turned that corner, now finding support around 50. So there is sort of more of a positive outlook on the momentum indicators now, with a positive bias. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.